Welcome to the chat where the deals get done. Real estate tips and a whole lot of fun. Think different, achieve your goals. Real estate simplified, that's how we roll.
Good morning, Mike Kruse, owner-broker at Reside the Real Estate Company, here with Brandon Rizk from Allied Mortgage.
Good morning. How you doing, Mike?
Doing great. How are we shaping up in the mortgage world this week?
The mortgage world is okay. We had a lot of nothing actually.
Right.
And it started rates started trickling a little higher,
Yeah.
and then yesterday we have a government shutdown. We're at the beginning of October here,
Right.
25, and we have a government shutdown, and the ADP numbers came out slightly weaker. Actually, not slightly, pretty weak. And it's starting to put, the actual rate cuts that Mr. Powell was talking about into play
Right.
again. We were supposed to have a jobs report this Friday, which is a huge report when
Right.
it came to rates and their projections for lowering rates. But with the shutdown, I don't know that we're going to get that report.
Okay.
So that report's delayed.
Okay.
So I'm actually eager. I know, when rates go down, it's a sign of a weaker economy.
Right.
But in our world, the housing world and the mortgage world, this is actually, in the end, I believe, good news.
Okay.
How we doing?
And I was reading a couple things with government shutdowns historically have meant good news for the interest rates, that they have gone down a little bit in the past. Obviously, we don't know what the future holds, but
I'm going to go ahead and call a conspiracy out. I know I shouldn't do this, but I'm gonna. So the federal government, so shutdowns are historically bringing lower interest
Right.
rates, and all the news coming out historically are bringing lower interest rates. And it's just so odd that the government has a lot of debt due coming very
Okay.
soon that they're going to refinance.
gotcha.
So
So they want those
I don't
bond
want to call it
rates.
conspiracy. but I'm going to tell you this is. I'm actually a believer in this. I do believe rates are coming down.
Okay.
They're almost forcing it to come down, and I don't care Democrat, Republican. This is actually, in my opinion, a joint effort because there's a lot of debt that is coming due by the U.S. government, and the lower rates are, the better the refinance terms.
Interesting. We'll have to see how it plays out.
We'll see how that plays out.
Yeah.
So, how about our real
All right.
estate world?
The real estate world is humming along. As we've discussed previously, our market here in Las Vegas, we have two markets going on. There is the 500,000 and under market, and there is the 500,000 and over market. If you're in that under 500,000 market,
I thought you were going to go 1.5 million and over, and then the 500.
no, not quite. That under 500 market is really humming along nicely. If you're over that $500,000 mark, it's taking a little bit of time to sell the homes. Your home better be clean. It better be smelling good. All the stuff we've talked about in the past.
Stuff we've talked about. I'll tell you, I have just off the top of my head right now, I have two clients making offers. One in that price range.
Yeah.
One is they're 550 and under.
Right.
Actually, excuse me, 500 and under. I'm sorry. I was thinking 450, but anyway, one's an investor and one is somebody looking to acquire a primary residence. And both of them have made 3 offers, strong offers,
Right.
and didn't get the homes.
Yeah.
So it just goes to show if your home is nice and it's good and it's priced right, it's going. And as a buyer, you're not going to get the world in that price
Right.
range generally
No,
if the home is nice. So kind of contradicts everything that we're being told and we've been talking about. So I think that market is humming along actually okay.
Yeah.
If it's priced right, but over that
No, I had to send out a
Everybody's fighting.
rejection yesterday because we ended up with multiple offers on a lower price property.
look at that.
So, it's still can happen out there, guys. So if you are in that lower price point and you want to make an offer, if you love the home, make a serious offer, make it a really good offer. The offer that did get accepted was very close to the listing price on the property.
Wow, that's great. That's
Yeah.
good in today's
and
world.
no concessions at all.
Yeah, that's rare.
Right.
In my opinion, that's great.
Yeah.
And it's coming around. And speaking of that price range, I'm excited about today's podcast. I know a lot of this is my realm, but today's podcast, we wanted, Mike and I discussed, and I think it's important. We always talk about rates, we always talk about everything,
Right.
let's talk about affordability. I think that's a hot topic.
Definitely.
And you know, how does it work? What does a bank do to qualify you? You know, if you're a tipped employee, things like that. So today, I think that's a great topic, Mike. I'm excited to talk.
Yes, definitely. And if you are watching, hang on till the end, because if affordability is a concern for you, I've got a great property at the end that kind of takes care of that.
That's cool. Let's do it, man. So.
All right. So let's get into it. And what are we looking at as far as costs when getting pre-approved? First off, credit checks. Is there an upfront cost? How does it affect my qualification?
You know, you should not have to pay. Some people are charging for their credit reports, and I understand why, but most of the time you shouldn't be until their property closes. So most of the time now we have something that's called a soft credit inquiry.
Right.
Okay. Most banks have them. If they don't, you're out of date, in my opinion. It's a thing where we get a 99.9% accurate, almost identical credit report, but it doesn't show a credit inquiry on your credit. This is the new way to shop.
Okay.
Because, you know, a lot of people would be afraid to go places because their credit inquiries, their credit score would take a hit, right? Now we have credit inquiries, and most banks don't charge for that. A soft credit inquiry, most banks don't charge for that. So what does it cost to get pre-approved? Nothing.
Okay.
But your time. So take the time, do the application online, or meet with your loan officer. It doesn't cost you a credit inquiry. It doesn't cost you a credit fee. It shouldn't cost you anything just to see where you're at.
And what is the difference between a soft credit inquiry and a hard credit inquiry?
As far as the report that we receive, virtually nothing. But, you know, a hard credit inquiry is when the bureaus actually report that you inquired on your credit.
Right.
And the difference is the more you do that, the more it hurts your credit score and your FICO score. So, you know, they say there's a window for shopping and you can run your credit so many times in this same industry for 30 days. It's BS. I don't care what anybody says. I've never seen it work out where the credit score is not affected whatsoever.
Gotcha. I was going to ask you about that because I've heard that in the past too, but I've also had clients come back in the past and say, I went to 3 different places and each one knocked my credit score down 3 points.
Right. And so now, you know, here's another instance, car shopping. This isn't even just how car shopping is the worst.
Yeah.
You know, when you're shopping for a car and you're running credit, and not only do you go to one dealer, but you don't realize that one dealer might run it to 12 different banks.
I was just going to say that. You know, I've had it done before where I go car shopping, and they pull the credit from like 6 or 7 different places all at one time.
Which I just don't understand.
Each of them is its own inquiry.
Each one has its own inquiry.
Yeah.
So I've had people just, you know, they were looking at like 3 different car brands, and their credit is kind of, you know, in the middle to lower range.
Right.
So they're shopping around for the best deal. And they had at one point, I think one person had over 30 credit inquiries.
Right.
I mean, their score went into the 500s from the 600s. I mean, it just
can
ruined
make
them.
you go from, okay, we can go house shopping to, no, we can't, we got to hold on.
So when you speak to your realtor and your realtor refers you to a bank or a loan officer or wherever you go first, when you speak to your bank and your loan officer, wherever you're applying for your mortgage, ask for a soft credit inquiry so that way you can shop around. So now at some point the bank does have to run your credit with the hard inquiry.
Okay.
But most of the time we wait until you're in contract.
Gotcha.
That way we're running it one time. Not at pre-approval and then again at contract, whatever that may be. The report doesn't expire at that point. So you only should get one credit inquiry by buying a house, whereas in the past it could be more.
Right.
You know, so that's something any consumer should be asking, and I just expect car places to start following suit soon enough.
Hopefully they will.
Technology's getting better where you would think that they can figure that out.
Yeah.
So,
my next question is, how does a bank qualify the income that they're going to use for your pre-approval?
Okay, so you know, a lot of people don't know this. Banks, if you're an employee, not self-employed. Self-employed is a whole different realm.
Right.
If you're an employee, the bank takes your gross income, your income before your tax deductions, before your insurance deductions. So, you know, we basically will take your salary.
Right.
Okay. So if you make 100 grand a year, okay, but you really only get 82. Don't tell me what you get after all your, deposited into your bank account. Tell me your salary. Tell me what you make, because we're going to average that or take your salary without, factoring taxes. If you are tipped, we're going to generally do average of, anytime you have variables in your income, like tips, overtime, or if you're just not a full-time employee, we're going to average your income over 12 to 24 months. And just look at it that way. There is some common sense in there. Let's say, Mike, you're a wage earner, and this year you got a raise, significant raise. Well, if I averaged your income, it would not reflect what you really make. So if you got a raise this year, we're going to factor that in. We're going to do a lot of stuff. So it's not rocket science, but at the same time, you have to know that if your income's variable, there will be some kind of average in there.
What if I had a letter stating that on this date, October 1st, 2025, my new wage is this amount of money? Can you use that whole raise then?
Now your employee's going to have to specify your hours. And if you have a pay stub to back that up, before closing, that really helps. Okay, but any future income letter will work on a conventional loan. A government loan like an FHA or VA, they're going to want to see generally 30 days to back up whatever letter that is. But a lot of banks will get that after closing, stuff like that. So there's some leeway there.
Sounds good.
If you're self-employed, this is where it gets a little tricky. Self-employed people in the banking world, they get the shaft. They really do. Everybody writes off as much as they can because nobody wants to pay taxes to the IRS. I don't blame them. But in a self-employed world, generally we use your tax returns, and your tax returns, we take the net, not the gross. Because we have to factor in, you have to pay your business expenses. And now there's certain expenses that we can add back in, business mileage, depreciations, depletions, things like that. But generally your net is pretty much where your income is. So if you are a self-employed person, now a loan officer can't recommend you how to file your taxes, but before you file your taxes, they can tell you what you qualify for with a rough draft. And that's what I tell people. Look, I can't tell you to raise your income, lower your income. I can't tell people that. That's against regulation. And I would never. But what I can do is, if you provide me with a tax return, I'll say, okay, based on this tax return, this is the pre-approval you'll have. Whether you want to write off less or do more, whatever it is, that's up to you. But at least I can tell you where you qualify before you file it, so that way you're not amending your taxes and stuff like that. And to be even more, there's other programs for self-employed people, bank statement programs where we use your actual bank deposits to qualify you. Instead of, and we'll take just a standard expense factor.
Going to ask you about that, like for somebody that works on commission. Will the bank statement programs work for that, or is there another better way?
They can. A better way for people on commission, in my opinion, is what's called a 1099 loan. Most people on commission get a 1099 from their broker, employer, whoever it may be, contracted employer, I should say. And what a 1099 is actually the easiest thing to do. We take your 1099 income, we take 10% out, and that's your income. So if you made 100 grand, we're going to basically give you $90,000 a year in income.
Gotcha.
They're not going to care what you write off. They're not going to care any of that. Now, the only caveat to that is most banks that do that, they want to see a quarter's worth of bank statements just to show that that it's still coming. Averaging. It doesn't have to be exact, but they're just going to make sure that
it needs to be the ballpark.
Because here we are in October. You showed me 2024's 1099. Well, 10 months have passed. Are you still doing that? That's all they want to see, is that you just with the bank statements, that you still have the income coming in.
Now, with those programs, though, isn't the down payment a little bit higher?
Yes, generally, the cheapest down payment you'll get is 10%. I will tell you 15 and 20% is pretty much standard. We have P&L loans. There's a whole lot of different ways to do it. But, generally, when you start getting outside of using your tax returns, you have to put more money down. 15, 20%.
It makes sense, though. The
bank gets, the bank gets a little more reasonable, but they're going to want, some equity in that property. They don't want to be buried. So, the thing is, I think that, I guess the importance of it is that, there's always an idea or a vision in your mind, and you don't know until you try it. You might qualify for more money than you think. Again, if your expenses.
And a lot of times, you see this time and time again, and usually my clients, they'll go to the lender and then they come back and they're like, they told me I could qualify for $600,000. I don't want to spend that much. I don't want a $3,000, $4,000 payment. I said, I get that. We don't have to go that high.
Right? I actually stop when I usually talk to a client. They'll say, well, what am I pre-approved for? I go, more than you want to spend.
Right.
Some of them get very inquisitive and they're like, well, what's my number? I said, I can generalize a number for you, but do you really want to know it?
Right.
Because, it feels good to know that number, but now you're tempted to go a little higher and a little higher. Stay in your budget, though.
Right.
But you might qualify for more than you think. And I think that without having to pay anything out of pocket, take the 30 minutes and do an application. How hard is it?
Right. Especially if it is a soft credit check.
Right. So
what have you got to lose?
When it comes down to affordability, Mike, we really don't know until we go through it what you may qualify for.
And that brings me to the next topic.
Yeah.
Debt to income ratios. This is something always discussed when applying for a mortgage. It's important to know because the bottom line is that ultimately determines what you can afford.
Yes, generally, and I'm going to give you a very, very general guideline. VA will go higher, FHA will go higher, sometimes conventional will go lower, but basically, this is what I tell clients. If you're not self-employed, your income needs to be double your total monthly expenses.
Right.
A gross income. Okay, so meaning your salary needs to equate on a 12-month, average, double what your minimum payments are on your credit report. I don't care about your car insurance. I don't care about your cell phone bill. I care about the minimum payments on your credit cards, your car payment, and your proposed house payment. Those kind of things.
So for those that might be new to this, explain exactly what is debt to income ratio.
So so it's not your total debt, and that's a big misconception. The bank cares about your monthly payments.
The minimum monthly payment.
The minimum monthly, what does it take to get by? So it is your mortgage payment and all of your minimum payments on your credit report. That is considered the debt. And then your income, obviously, is your income average that we calculate. And that's all it is. You take the debt divided by the income.
Okay.
So, for example, if your total debt every month, including your mortgage payment, is $3,000, your income is $6,000, that's a 50% debt to income ratio.
Right.
It's not rocket science. It's very simple, actually. But people always ask me, well, I have this credit card, it's $5,000. Should I pay it before I buy?
Probably not.
Maybe not. Sometimes I tell people that because I don't want them to go to a house, spend money on their house, and then still have debt.
Right.
But at the same time, there are many instances where people think paying off debt is going to help them qualify, or they'll pick a certain debt when I'll say, no, pay off this other debt. That one might qualify you for an extra $50,000 on a house.
Right.
And it's only a $2,000 debt.
Yeah, and that's the other thing is the conversation I have with clients a lot of times. They have a credit card. They pay $200 a month on it religiously, but the minimum due is only $50. So there's a $150 variance. A lot of times the clients think that $200 is what is factored into the debt to income, and it's not. It's only the $50.
Well, let's say you have a credit card. The credit card is a $3,000 balance, but the minimum payment's $50 a month. And again, I'm just throwing a number out there. And then you have a RV loan, and the RV loan is $5,000 remaining balance, but it's $500 a month payment, or whatever that may be. You would be 100% better paying off the bigger debt because you'll qualify for more money.
Right.
We're only going to use $50 on this debt, $500 on the other.
Right.
Big difference, but the balances are pretty similar where pick and choose what you pay off, but don't do it on your own. Call your loan officer and have your loan officer say, look, if you did this, this would get you this mortgage. Or this might boost your credit. I mean, we're not credit repair experts.
Once again,
but we do this all the time. We should have recommendations.
This is where an experienced loan officer makes the difference from somebody just sitting in a cubicle in the middle of Iowa.
Here's one other instance, and 100%. And one other instance, like a lot of loans, we can exclude an installment debt when there's 10 payments or less.
That was my next question. I know there was a time frame.
So a lot of people say, no, you got to pay off this thing. No, you actually just have to pay it off to 10 payments, and then we'll exclude it.
Okay.
So, one loan
That's
officer
a
might
great
say,
little tidbit there.
yeah, one loan officer may say, no, you need to pay $7,000 and pay off this
Right.
debt. The next loan officer says, whoa, wait a minute. You only need to pay $2,500 of that.
Right.
And I just have to show that you made that payment, and now the debt doesn't exist in my eyes.
There you
Even
go.
now, you just didn't have to come up with an extra $5,000 or whatever that is. So
Right.
again, an experienced loan officer should be able to tell you that stuff and help you with that.
I would imagine if you have 6 of those accounts, that might send up some red flags.
Yeah, it could, but no, I mean,
But really,
it's
you
all
can get
relevant
away
to
with
your
it.
income.
Okay. That's awesome.
I know people that make $1 million and they have $300,000 worth of debt a year, and they qualify just fine. But like, I know somebody who makes $70,000 a year that has zero debt. So it
Right.
doesn't. You can't. It's all relevant to the income.
Everybody's situation's totally different. But what I'm reading between the lines here is when there's a will, there's a way.
100%. 100%. Sometimes putting less money down and paying off debt is a better way to go.
If you've been on the fence about buying a home and you just don't think you can qualify, talk to a loan officer and see what you can do.
Tell us everything, guys. It helps. We can recommend things. Like, again, it may be more beneficial to put 10% down on the property and take
Right.
that other 10% and pay off your debt. The money you're saving on your mortgage versus the money you're saving on your debt is probably night and day.
Right.
And I tell people that. Like, sometimes people just get wrapped up in, I don't want to pay mortgage insurance, or I want this big down payment. But you have so much other debt that you're going to be drowning no matter what. So
Right.
take that money and you'll actually, by buying a more expensive home, save maybe $1,000 a month.
Absolutely.
So
So-
always ask the questions.
We may have somebody watching, they're like, my credit's good, my debt to income ratio is good, I just don't have money for a down payment.
Yeah.
What can we do in those situations?
Down payment assistance is available generally for most everybody.
Okay.
Okay. I'm going to speak some of the standard ones. Now, there's a lot of programs out there. I only deal with a few of them because some of them are more hassle than they really close, to be quite honest with you. A lot of them are gimmicks. But the ones that I know work, generally you can. Listen, if you don't need down payment assistance, don't take it. Your interest rates are a little higher. Generally, you have to pay that money back when you sell or refinance the home. So a lot of people say, I want it because I'm a first-time home buyer. Okay, great. But you're still going to have to pay it back. Why
Right.
pay higher interest? Just pay your down payment and pay a lower interest rate. But if you absolutely need it, it's a great option for you. The going rate might be 5.8. Maybe you get a 6 1/4.
Okay.
It's not
It's not
life-changing.
horrible.
And then they give you your down payment, some of your closing cost money, and there is a zero payment on that. You just have to pay it back when you sell or refinance the loan.
Okay.
So it does qualify. Most people don't know this. You need a 640 credit score or higher generally. I have one program that'll go to 600.
Oh, wow.
But to generally qualify, 640.
Okay.
Debt to income ratios, if you have a higher credit score, they're going to be more lenient. Lower credit score, they're going to get more strict.
Okay.
But it is an available option, and a lot of people take advantage of it. Most of those programs, the interest rates, everything, are determined by the state that you live in.
Right.
In our case, the state of Nevada. California has 10 times the programs that we do, but Nevada does have programs, and they are available. If you don't have down payment, but you can afford it, ask the questions, because there are affordable programs for you. So
Great information today. I'm really happy we talked about this.
yeah, absolutely.
And next, we have coming up here a couple listings, featured properties. Our first one here is, and I was talking about affordability. This home here, you guys, you see this is a fairly small home. It's just over 1,100 square feet, 2 bedrooms, 2 baths, and you see what looks like a garage there? That is, the garage has been converted. It is a full-blown guest suite.
Oh, that's cool.
There's a full bedroom, bathroom, living room, and its own separate entrance on the right side of the house there. If we could go to the next slide.
That's cool. And you have enough driveway to still park in the driveway.
Oh, yeah.
there.
They've actually widened the driveway there, 2 cars easily and probably 3 cars.
Yeah.
This is the main house. All the finishes you see in the main house, they've carried over into that guest suite, so it all looks
Love the wood
identical.
floors.
Yeah. The luxury vinyl plank flooring. If we go to the next slide, please. Kitchen here, stainless steel appliances, cute little island there. If you kind of look behind the island, that's actually the spot for the dishwasher, but they swapped that out with a wine fridge.
Wow.
Really great use of the space because they don't use the dishwasher.
A lot of people, you'd be surprised how many people don't use a dishwasher,
Oh,
which
oh,
is insane to me.
I
use the heck
actually
out of my
don't.
dishwasher. Really?
I never.
My wife's family,
Yeah.
they let the dishes dry in the dishwasher,
Really?
which I think is
Yeah.
the weirdest thing in the world. But go ahead, I'm sorry.
Couldn't even tell you the last time I opened the door on my dishwasher. And going here, this takes it from another angle. You have a great dining room space. Then you look out to the backyard. If we could go to the next slide here. Primary bedroom is huge. It has its own entry out to the backyard.
It's a nice sliding door there.
Beautiful. You can see this home's been totally redone.
Yeah, I was going to say, it's been very well kept and clean. And
Yes,
nice.
absolutely beautiful. Huge backyard, big patio. It's actually been set. There's the braces there for a covered patio. All set,
I
just
can
needs
see
to be
that,
done. And you have a really nice shed there too for storage or tools or whatever you want to do out there. And then it's actually a street behind it, so you don't have a neighbor directly behind you. It is an all single-story community.
That's nice.
And this home is located in South Valley Ranch, out off of Gibson and Boulder Highway, just about back to the Cadence area, not quite. And it's listed at $409,000, guys.
Wow.
Great deal for a beautiful home. Perfect for an investor or first-time home buyer.
Wow, that's great.
Then we'll go to the next one here. This home is...
That landscaping, wow.
This home's absolutely gorgeous, the yard and everything. Located in Sun City Anthem, so it is a 55-plus community. The house itself is a 2-bedroom, 2-bath.
We've spoke about Sun City Anthem, Mike. I mean, this is just an
if
awesome community.
You're 55 or older and you're looking for amenities, there is no better community. And the HOA here, it's, I believe, $424 a quarter.
A quarter, that's very affordable.
A quarter, yeah.
Okay.
So it comes out to like $135 a month.
For what you get, that's way worth it.
Yeah. This home, beautiful courtyard. There's actually a casita in the front, which basically gives you a 3rd bedroom, 3rd bath. Just a beautiful private courtyard going into this home.
It's great for
very
the grandkids
Spanish
when they come
style.
visit or whatever, to
Right.
have their own separate quarters and
Yes.
stuff like that. So that's nice.
Here we have the main living area. This is the living room and dining area. You see the slider that goes out to the back door there. There's a beautiful fireplace, and it's ready for somebody to move into. Kitchen counters are solid surface, Corian, decent cabinets, does have white appliances that could probably use a little upgrading, but everything is in great working order. And then towards the back of the kitchen there, you see a nice little breakfast area with windows out to that courtyard that we just saw a moment ago. And you also have a breakfast bar here, plus the island. To the left of this photo is a large pantry, so it's a lot of really usable space.
The size of the kitchen is actually very nice. I mean,
Yeah.
the cabinets are, they may need a little finishing, but if
Right.
they're well kept, which you're telling me they are, throw some paint on those, some hardware, and it look brand new in there. I mean, it's actually very functional kitchen, if you
Right.
ask me.
And great primary bath, separate tub, separate shower, nice big soaking tub. Also has a huge walk-in closet. This home is ready to go. Fresh paint. It is absolutely gorgeous and listed at $650,000. We just took a $20,000 price reduction on it. So it's really a great value. Huge,
Nice covered patio there.
beautiful covered patio. The lot itself is over 8,000 square feet.
Wow.
So
How big's
really
the
good
house?
sized lot. The house is 1,850 square feet plus 250 square foot casita, bringing you to almost
You have a
2,100
6,000
square
square
feet.
foot lot on top of the house. I mean, that's a pretty
8,000 square foot lot.
Well, I mean, on top of the house. If
Yes,
you take
yeah,
2,000 out
right.
and all that, I mean, that's 6,000 square feet a yard, the
Right.
way I see it. I mean, that's pretty big. That's
Yeah,
big
no,
yard.
it's absolutely fantastic.
Mm-hmm.
Beautiful yard, great landscaping. It has a little waterfall out there.
Nice.
And it's ready to go, located at 2244 Savannah River in Anthem. And there is an open house on that home all weekend long, Friday, Saturday, and Sunday from 10 a.m. till 2 p.m.
Awesome. Well, good luck with that, man. I think they're
Thank
both
you.
beautiful homes. They're great, and anybody looking in Sun City Anthem, I think that's the area to buy. So, if you ask me,
Right.
so
I know you love Henderson. I've actually lived there myself for quite a while, and yeah, there's no better area in town, in my opinion.
I agree.
So, what can we do to buy a home with crypto? Cryptocurrency,
I get asked this a
Bitcoin.
lot, actually. So, Banks will allow crypto funds. They'll source crypto funds, but you have to source them. That's the hard thing with crypto in my world is you just have to source that you bought those funds and you can take them out, deposit them in the bank. So as long as you can source the money in, we can take the money out.
Right.
But if you can't source the money that you put in there to buy the crypto, then that's an issue. But a lot of people buy crypto from their bank account, whatever it is. They just go in and buy it. They let crypto build, and then they put it back in their bank account. No problem. We can do that. It's when you can't source it. So now, but there are, as we're learning, this is something I really can't speak on, is there's actual banks that will fund you with crypto. I mean, it's a whole thing that's coming out. So I don't know much about that.
Hopefully we'll do a whole episode on it coming up.
Yeah, that would be cool. We did get an email from somebody, and we're hoping that they call, because actually I think that'd be a really cool podcast to talk about. So.
Absolutely. Yeah. All right. Thank you guys for watching. Please like, share, thumbs up, subscribe, comment, ask us a question. We'd love to answer the questions in the comments. And we'll see you on the next episode.
See you guys next week. Oh.
Welcome to